If we see continued resilience, continued strength in U.S. equity markets, that actually goes against potentially what the Fed is trying to achieve. The Fed wants financial conditions to tighten somewhat. And if we just see markets grow increasingly comfortable and investors grow increasingly confident in investing in the market, then that presumably just creates a continued relatively loose financial market condition.
Yeah, and Esther George in her interview yesterday actually touched on that point, that she said like financial conditions must stay tighter, right? We cannot really let that loosen up too much. And we're just below the flat line on those financial condition indices that are available. And it does say on the one hand, it's an economy that has improved or is improving, firming up. I think that's one reason why equities are up and that earnings are better. Those are fundamental reasons. But the other reason is there's a lot of faith that we have passed the peak of inflation. And as we discussed, it's quite uncertain if we actually are. And so there will be, I think, a point made about that financial conditions broadly have to stay tighter in order to achieve our objective. If anything, they will make them tighter by raising the Fed funds rate more. So it is, I think, something of focus. But I don't get the sense from the Fed speakers prior to the speech now that have been interviewed on CNBC that they're alarmed about the market at this moment. I guess they don't want to say anything about it. So it will be up to Powell in his speech to probably address some of that, at least in the broad sense of monetary policy is effective when financial conditions are tight to get inflation down to 2%.
Ben, if the Fed were to admit then to a recession at this point in time, which does seem a little bit unlikely, would that limit their ability to hike rates as aggressively as they would like, particularly over the near term?
That's a fair point. If you say that, and like what the Bank of England actually did was extraordinary to forecast a recession, then you could say yes, that it limits you. But this situation though is about, well, this recession may indeed happen, but if we're getting the Fed funds rate up enough, the high inflation rate will come down sufficiently or mostly that this recession will become like indeed a soft landing, and therefore you could continue with your tightening campaign. I think this is where we are at this moment. In markets, there's a belief that the soft landing is an outcome. We moved away from the stagflation outcome that was feared in the middle of June. Federal Reserve will acknowledge that inflation is way too high and they have to bring it down. So they will keep staying on that message without then saying there will be a recession as a result, even though some Fed members have come out saying you can have potentially avoided that will happen. I don't believe that Powell will say anything about that today, but that it is a possibility that recession happens. Yeah, that's something we can't exclude.